What's up, YouTube? Today we are going to be talking about the options Greek delta. It is by far the one you probably know the least about. You probably know one surface level definition. It's the one reason you guys just don't know. I'm seeing too much. We got to make videos. We got to talk about these options Greeks. You guys need to understand what they are. So in this video, I'm going to give you the short, sweet, the best. I give you the most important things to go over when looking at the delta. Now, this is TOS, just a popular app that I know a lot of you guys have, so that's why I'm choosing to do this. In my course, I have a whole options course. All my links are always in the description, just like every other YouTuber. Robinhood has everything looks a little differently, but I know you guys all have delta. There's no way you guys don't have this one. Now, your basic knowledge is probably calls go up, puts go down. That's your directional bias. And then delta, the rate of change per dollar, right? So we are actually in the Qs right now. We're going to be working on this column right now, right here, I guess. Qs the last 274. So we'll say it's at 274. Let's say you're to buy this contract right here. So you bought this contract, bought it right at the ass. We'll say around $5. This now when QQQ pushes up $1. This contract will be worth 52 cents more. Another thing about this, these guys, they are rated per share basis. Okay, so that means that's the same as you owning 52 shares of that. One perk about these options contracts are you can buy 52 shares at that price. You can come in here and spend $500 and get that same kind of movement. That's your exposure, right? Now we know you're positive because you are positive delta. And where's the delta over here? Over here you'd be negative delta. So just you telling me in general directional bias, where are you positive or negative delta? I now know you are long or short. So you know it's the rate of change. That's the most basic thing you can understand. Now the next thing I can tell you guys is this alone tells you your percentage chance of that thing expiring in the money. Not making money, expiring in the money, which is why, so you guys know all of this. This is in the money. That's why it's shaded. This is out of the money. So we're, again, 274. So all of this in the money right here. That's out of the money. Now, you guys, basic option stuff. Do we have intrinsic, extrinsic? Yeah, here it is. No real value whatsoever. All of these have real value because they're that far in the money. This is the time value. You're paying for time on a lot of these. And now that's usually what's dwindling away and why you're wondering why you're losing money every day. We'll get into that next week when we talk about theta. Let's focus on this. Expiring in the money, which means the chances of it getting to this shaded area by the expiration. About a 50-50 shot right here. A little bit further because you're in, a little bit less because you're out. Again, directional bias, positive delta. We will be negative delta, so we know where we're at going that way. Now that's important because when you guys are diving into options and doing different strategies, right? You will you bought one contract and then sold this one against it. Now, because you sold this contract, you're actually negative delta. So you would take 52 minus your 35. So you're 17, you're positive 17 deltas in this position. So that thing pushes up, you're positive basically 17 shares. Now that gets into strategy. There's a defined risk there, but that's your bullish, your directional bias is still positive. Take your positive deltas minus your negative deltas. There's your position and your directional bias to it. The cool thing about options and stocks in general, whether you trade options or not, in the chat, most of you guys are in the chat. You're probably in my chat. If not, there's a free one and I'm a mentor on WeTradeHQ.com. Just go check it out. In the chat, you can tell me you are positive or how many deltas you have. Right, so delta, there's hard deltas and there's soft deltas. You come up to me and say, "Hey Don, I'm in this position, 90 deltas." I know a couple things. One, you have 90 shares. Two, you have probably a contract. I don't know where that's going. Sorry, I thought it was my square. You probably have a contract up here that's just in the money, just super in the money. Or maybe you have a couple at the monies. or you have just 9 crap contracts that don't make any sense at all, and they're going to expire worthless and going to be 100% loss. So, again, per share basis. I don't want to get off track here. Hard and soft deltas. Hard deltas are actual shares. Soft deltas are the deltas related to options contract. Your position as a whole, everything you are plus minus all your I guess bearish positions. How would you word that? The sum of the positive and negative deltas, it would still be your soft deltas. And again, that tells you your position as a whole. Sorry, I'm kind of sputtering around. I tried to keep this focus all together at once. I'm not rambling on. You guys know how easy it is for me to get into rants. One more thing for this, you're out of the money, so we just focus kind of like down here. Again, out of the money deltas. These deltas also tell you your probability of touch. So stocks don't just go up. They don't just go down. I keep the coin right here. I always bring this up. There is 2 sides to every coin. No matter what side you're looking at, it doesn't matter. The other side is always there. So as things go up, as they go down, you might have your directional bias. They still go up and down. These out of the monies, if you don't have, I think I have it up here, probability of touch. You can actually just double this, right? So 0.45 deltas. Take that times 2. Now your probability of touch, about 90%. So you're a little bit off. So there's a 90% chance. You're telling me right now, 90% chance that this underlying touches 275 before October 9th. Right now it's the October 2nd. So in 7 days, there's a 90% chance we touch 275. Now that probability of touch. The reason I say it's the out of the money's down here is just because once you get at the money, your probability also just goes down the further you go away from it. So it doesn't work for up here, because the probability of us just tanking that much, just gets less and less. But a quick little plus for you right there. Which I think in the options course I actually gave you guys a life hack. Perks of the option going to 0 and expiring worthless. You don't have to pay the commissions to sell that contract. Let's talk about Delta one last time before I wrap this video up for you guys. Because here you guys are buying this and you have no idea. You bought something down here because either you're broke, nothing. You got $100, so you're going to gamble $100. Whatever. Your money, do whatever you want. Let's take a look at that contract real fast. What can you tell me now about this contract right here? You got the 283 calls. 283 calls for QQQ expire next week. You're 7 days out, 283, 19% chance we actually even touch that. Now your options are never even more than a 50-50 because you have to take that minus the strike price just to even get to your break-even spot because you still paid. You still paid your premium right here. So you actually need that to go a little bit further just to make money. This is your probability of it just going at the money. At the money, right? It's just 1 penny or more, which means you just paid your $100 and you still lost your $100. You still need to it needs to reach even further for you to actually make money on this. So 19% chance. You're starting off with some pretty small chances. I mean, everything's always like, your best is going to be a 50-50, but you just significantly diminish that by so much. This is why I call it a crap contract. You guys are buying what you can afford, and what you can afford is not to trade. You can afford paper trading. You can afford to learn this more. Hit that bell button, subscribe, hit the bell, and learn about options contract before you just piss all your money away. Because I see you guys grabbing contracts like this, and you have no idea what you're doing. You just think, okay, if it moves up $1, I'll make 19 cents on the contract. Spend a little more, that exact same dollar moves up 50% or 50 cents per contract. Spend just a little bit more and you'll get 85 cents per contract, but you can't afford that. You're basing your trades off of your money and the market doesn't care about your money. It's just going to take it all. So a popular option strategy is selling anything. You're at like 30 deltas and below. It's selling it because that tells me, there's a 30% chance or a 30% chance of you winning, expiring at the money, 70% chance I keep all your money when I sell you that contract. Because there's the person who buys the call, the person who sells the call every time. I joke around all the time, and most of you guys don't even know I'm insulting you right to your face. When you guys ask me, I want to short this contract, and I say, hey, what strike? I'll write that contract up for you because I'll just take all your money. So now that you know about this, let me know in the comments down below. Did this help you guys out at all? Do you understand now the crap contracts some of you guys are buying and why someone is so happy to sell you those things? Do you understand how this can move, how this can affect? Later on, we'll go about gamma, right? That is the delta to the delta. So once this pushes up 31 cents, now you tack a little 3 on there, and it goes up. So closer to expiration, some of these can turn into some gamma monsters. Also, at the money, it just gets less and less as soon as you leave it. So closer to expiration, you're going to watch that thing just ramp up and become a monster. That's why options at the end get very crazy. Your probability of it expiring at the money with that time left on the clock's ticking, and you're running out. You can lose a lot. So let me know down below. Did you guys learn how? Did that help you out at all? Do you think you can trade contracts just a little bit better at this point? And I'll see you guys in the next video.